And the market is saying there's a 90% chance we get a rate cut at tomorrow's Fed meeting. But what kind? We'll have to listen closely to Chair Powell's comments for clues on the future cuts and the balance sheet. Joining us now is fast money trader Guy Adami, co-founder of RiskReversal Media. Guy,
hello,
good to
John.
see you. What are you listening for from Powell? Assuming, 90%, hey, that we get the cut.
Well, it's amazing, and thank you. Hello, Morgan. Hello, John. Thanks for having me, as always. It's amazing that at one point over the last 3 weeks, we got down to a 35% chance of a rate cut tomorrow, and I didn't know where that came from, but here we are at basically a certainty of it happening, and it will happen. What am I listening for? Is he going to pivot once again? You know what? Although the job market we're concerned about, inflation remains problematic, are we going to sort of get back to that inflation is a problem? Because if we get back to that type of language, I don't think the market's going to interpret that way. And I'll tell you, there's this old, for you sports fans out there, there are people that believe if they put their hat on differently or put it on inside out, they can somehow affect the outcome of a game. That's the same way the Fed affects the outcome of interest rates. They're going to cut rates tomorrow, but I'm still pretty convinced that the 10-year yield is going higher from here for a myriad of different reasons.
Yeah, sports fans and also, by the way, space enthusiasts, very similar in terms of some of those.
Is that a true thing, or are you just saying that to make me feel good?
No, it's a true thing.
Okay,
so let's move on, Guy, because in addition to the Fed tomorrow, we've got Oracle reporting. It's up 10% in the past week. It's down 21% this quarter. I know some of the folks that watch things like technicals are watching this very closely to see if it continues to recover here. What are you watching? I
think it will recover. I went back and listened to and read all the things that came out on September 10th when it announced that huge revenue deal, and the stock obviously traded at levels where, in my opinion, it should have never been, because they told us about the revenue. They didn't tell us about the earnings, and I was pretty convinced we'd back and fill in that gap at 255. I did not think it was going below 200, but I think the way the quarter sets up and the way the stock is trading, I think this relief rally that we're seeing is to continue, and I think you will see a bounce somewhere between that 250 and 255 level, and in a number of different ways, that's what makes sense. It should have never gotten to 3.25. It should have never gotten below 200, but I think sort of equilibrium for this name is probably around 255, and I think that's where we're headed.